What is a petty cash fund? The petty cash fund is a small amount of cash that is kept on hand for small expenditures. Companies establish petty cash funds when purchases for minor amounts need to be made and writing a check is a hassle or it is not accepted. The money from the petty cash fund may be used to buy a small amount of supplies, postage, short distance transportation, or miscellaneous goods of a small sum. The operation of the petty cash fund involves 3 steps. 1. Establishing the fund. 2. Making payment from the fund. And 3. Replenishing the fund. The fund is established by writing out a check for the amount needed, cashing the check, and placing the cash under the care of an employee. A journal entry is recorded for the amount. There is no change to total assets as the cash has not yet been distributed outside the company. Payments from the petty cash fund are made one of 2 ways. Either the cash is taken out of the account to make a payment, or employees are reimbursed from the fund for payments they have made. Receipts are then collected and kept to prove the use of the cash. Note that no individual journals have been made. The journal entries for the expenses will be recorded once the fund is replenished. The remaining cash in the fund is counted and a check is made for the amount needed to replenish the fund. The receipts are also used to record the expenses to their correct account. The example shows that the fund needs $150 to fully replenish. The company will then need to cash a check of $150 to bring the total cash in the fund back up to $200. As you can see, the receipts have been used to record the expenses to their correct accounts. The cost of the expense accounts reduces the cash account for the amount of the check. This in turn reduces both equity and assets. Sometimes, discrepancies may exist between the amount needed to replenish the petty cash fund and the total amount of receipts on hand. The cash over and short account is a temporary account that can either have a debit or a credit balance and is needed for the missing amounts, so the books can be balanced at the end of the accounting period. Sometimes the amount needed to replenish the fund is greater than the total of receipts. In this instance, we debit the cash over and short account to increase the expenses in order to achieve a balance. Other times, the amount needed to replenish the fund is less than the total of the receipts. In this instance, we credit the cash over and short account to increase cash in order to achieve a balance. It is important to remember that the cash over and short account is added to the side with the smallest balance. That is either the debit side or the credit side. And this concludes the petty cash fund. Thank you for listening.